This is our final one of the year. We started this process back in January, so this is number 11. So this one will be the last of this year because of Christmas. But I think getting into the Christmas spirit, getting into the Christmas theme. We thought this month a good topic to cover would be being a savvy Christmas borrower. Most wonderful time of the year for many people can also be the most expensive. And while it can be a great time in terms of spending time with family, spoiling loved ones and things, there's always the risk that you get to January with a bit of a money hangover. And obviously, when we get to January, we'll be talking about that then. But I think, prevention is always better than the cure. So this month, we're going to talk a little bit about if you do choose to borrow to spread the cost of Christmas, some of the things you should bear in mind and ways to do that in a way that's going to be making this cost effective and avoid paying later. So without further ado, you'll be by now familiar with my two excellent colleagues. We've got Linz, who's in a very Christmassy mood. Linz is our digital marketing officer, and Linz works to get the word out about our products and services via all of our online channels. And again, another familiar face, also known as our in-house travel bureau. It's Monica Rock, membership experience manager, and it's working to take care of our members, however they choose to contact us, whether that's via email or phone or whatever else. So very nice to see you. Thank you for joining us today, whether you're watching live or the recording. Very nice to have you here. So in terms of what we're going to cover today, we're going to be looking at some of the reasons why people might decide to borrow at Christmas and why it is such a sort of an expensive time of year, and exploring some of the reasons behind that and thinking about whether it has to be. We'll also be looking at alternatives to borrowing. Often at this time of year, first instinct is to grab the credit card or to head to the shops. Maybe there are some alternatives. Maybe there's a better way. I don't know, but we'll look into that. We're going to go look at some of the different types of borrowing, some of your options, and explore whether actually, if you are going to borrow, maybe different types of borrowing have the advantages and their pros and cons. We're going to explore that a little bit. We're just before we kind of move to the Q&A at the end, we're going to cover the slightly less fun topic of paying it all off and having a plan to pay it all off when we hit the new year. And so hopefully be an interesting discussion. Looking forward to covering lots of topics, having a bit of a lively conversation between ourselves. And without further ado, kick things off. So borrowing, bad? It's a tricky, there's all this stuff around Christmas being kind of, do we need so much consumerism at Christmas? Is it all about the presents? How do you guys feel about borrowing at Christmas?
Actually, from the beginning of November, just as soon as Halloween finishes, you already see Christmas trees everywhere, all the adverts, jingle bells everywhere, all the songs, people coming into like this amazing spirit of the Christmas. So you just feel already like very Christmassy, and with that time of the year, you know that you want to spend time with your friends, you want to spend time with your family, you want to give presents around, you want to meet your friends for like some nice cold mulled wine. So you feel like a bit of pressure of like having money for all of it.
There's a lot of pressure to go out and spend money, and that's often money which I guess particularly this year people don't have.
Exactly, especially with the cost of living crisis now. Everything has significantly gone up. Food, as well. I'm sure items for gifts, those have also gone up as well. So it basically just changes the dynamic of everything. So essentially, I would say, you should try by all means to not borrow, but at the same time, I can't say borrowing is bad because everyone has a different situation, everyone has a different circumstance. I mean, I think it's all dependent.
And that's the message which I think, throughout our money gyms over the year, we've really kind of pushed is that I think, the job of these money gyms isn't for us to kind of sit here and say, you should do this or you shouldn't do that. Actually, how you go about managing your finance is very much a personal decision, isn't it?
Yeah.
And for some people, Christmas will be really important, and then obviously, a good chunk of our members, don't celebrate it at all. So, I think it's different strokes for different folks, as it were. But I think what it is important to though understand is that if you do choose to borrow, and it is always a personal choice, like we said. I think there are some things that you can do in order to make sure that it's not a decision that I think it's important that people avoid going into the new year kind of regretting the amount they've spent, right?
Yes. Yeah. True.
It's always spending within a reasonable amount.
Yeah.
Control yourself.
Yeah. So I guess what we're saying is, don't, there's no hard and fast rule on this, and we're going to explore some of the things that perhaps you can keep in mind. So, you've already touched upon it a little bit, Monica, in terms of kind of the reasons why people borrow. The obvious ones for presents, this time of year, particularly if you've got kids, that's when it gets really a bit intense, right?
Yeah, it's just like with gifts. This is like the time of the year, obviously, like everyone wants to kind of, when you've got like grandchildren coming or any members of the family, like this is what everyone is really doing. Obviously, it depends on like what the situations. As well, like because it's the festive time of the year, lots of people want to kind of go out, meet friends, as I said, for a drink, dinner, or something like that. And sometimes you don't want to be in the situation that you have to decline the offer to meet your friends.
I think that's good, like peer pressure.
Peer pressure, yeah. So sometimes they wouldn't understand that, and obviously, money topic is very sensitive. You wouldn't just tell them straight away, "Oh, I don't go because I don't have the money." You can always like consider meeting them halfway as well. You can just meet them only for one drink or something. It doesn't have to be, 5-star hotel or something like that, because you know how much money you've got, how much money you may borrow. So just bear in mind those spendings amounts, and you can still enjoy by meeting them and going for one drink or two. You don't have to spend a fortune on that occasion.
There's a lot of peer pressure there, isn't there?
Yeah.
It's being called a Grinch or
Yeah.
And what are some of the other things, Liz?
So other reason why people may decide to borrow is also for gatherings, which Monica touched on a bit earlier. Not necessarily just gatherings with your friends, but with your family as well, because most people enjoy hosting. There's nothing wrong with that. You want to host your family over for Christmas, have a nice Christmas dinner or a lunch, and that obviously comes at a cost, because you have to buy the food, you want to decorate the place, so you have to get decor as well. So you need to spend money for that. You need to cook as well. And another reason is with home repairs or upgrades. So a lot of people may tend to, sometimes there's little things in your house you just want to make tweaks to, but probably in the beginning of the year, you just tell yourself, oh, I'll do that in December. When I have my family over, I'll just push it until December. And then December comes, you're like, okay, I have this crack in my ceiling, or I want to change the color of my wall, or anything like that. And you just be like, this is not the time. It's Christmas time. Let me treat myself. I want to just revamp my house a little bit. Why not get a loan?
And I wanted to talk a little bit with you both about kind of the role of emotions, because actually, it's a very emotional time of year, and almost, I think like you've talked about, you've got the music, you've got the smells, you've got the decorations up everywhere. It's always kind of been intentionally designed to kind of get into your emotions a little bit, isn't it?
Yeah, because this is the time as well. It's not that everyone has got family in the area where they live. Many times people have to go travel abroad to meet the family, or they need to go somewhere far, and obviously the cost of that one is expensive as well around the Christmas time. But it's just like kind of people, I would say, struggle between not going and going because you want to go, you want to meet your family, but obviously there is a cost involved. It's kind of hard one because you just want to spend time with the family at the end of the day.
And I think it reminds me a little bit of the session that we did. I think it was over the summer with Professor Sally Ann Decker, where she talked a lot about kind of mental, your kind of mental health, and how that can affect your decision making and things like that. And I think people feel under a lot of pressure, particularly I think if you've got younger kids, they feel pressure, to give their kids or give their family the kind of the best Christmas ever, to make everything perfect. So I think if you're feeling that, I think it's important to say that you're certainly not alone in feeling that. And I actually think for lots of people it can be quite a stressful and pressuring time because of the role of emotion. So I think those are all reasons why people borrow at Christmas. I think some of them I think we would say perhaps good reasons. Some of them are perhaps less good reasons. It's all personal, and so I think whatever your reasons for borrowing, I think we'll go into talking about some of the things you can consider first. But I think before we do that, and I think I'm aware that because it's Christmas, we are talking a lot about borrowing, and that'll be controversial amongst people who say you shouldn't ever borrow under any circumstances, and all borrowing's bad. And I think it is important to say that actually you shouldn't feel under pressure. I think we've talked a lot about that pressure, and I think you should, it needs to be a considered process, and actually, borrowing does always cost money, and so it might, in lots of circumstances there are other things that you can do. I think other options. I think we talked a little bit about this. I think
Yeah.
in terms of kind of saving up. Some can it wait? I think Lynn's was talking about some of the things like doing up the house. Yes, you're feeling Christmassy, but maybe that's stuff which you can put off and wait. And actually, if even if you're not in a position right now for this to be the best Christmas ever, I think for lots of people it won't be their best Christmas ever. To put it lightly, there's nothing stopping you from starting to think ahead of next Christmas. And maybe actually, that one way of approaching this is you say, okay, we're going to have a slightly stripped down Christmas this year, but actually we're going to save up over the year so that next year I can afford to do things a bit, on a slightly bigger scale. I think, lots of Christmas sales this time of year. And so actually, can I wait until the sales? Because actually, I think,
with the sales, it's starting already from this Black Friday, so that you see the adverts everywhere, and as well, like talking about emotions earlier on, because that this day is coming. Lots of people just know that the discounts will be there, that the price will be less. So for this period of time, usually people jump online or go to the shops just to get the goods cheaper.
And I think it's big business, right? And actually, some retailers actually, will be there'll be some retailers put up their prices at Christmas because they know that people will be feeling the Christmas spirit, and it's not necessarily very Christmassy, but we know it happens. And I think the third thing, and I think again, not feeling guilty about this, it's fine to cut back, and that actually, in terms of, if having the best Christmas ever is your goal, then actually that's not about spending money. I know it's a bit of a cliche, it's sort of, that actually, particularly with kids, what they really value is your time. And actually, the question to ask yourself is, do they want a parent that's stressed out and under financial pressure and not able, and working all hours in all because, they've got into lots of debt? Or do they, or would actually, what would be better to have the kid, your kids spending time with you and having quality time together? So, again, a little bit of a cliche there, but I think, it is always important to remember that, having the best Christmas ever isn't always necessarily about spending money. And I think that's one that we probably can't repeat enough. I think that's important. So, I think worth thinking about all of those things as well in terms of kind of, why are you borrowing? What are the reasons for doing that? We've got some questions here that, we've sort of summed up some of the questions you should ask before you borrow, Lens.
Yes. So basically earlier on you mentioned something. You said prevention is better than cure. So before you even consider borrowing, it's obviously things that you need to ask yourself, things that you need to reevaluate. So first of all, what do you need the money for? A lot of times people may tend to borrow and the purpose does not necessarily suit a loan, should I say. So for example, if you feel like, I want to make ends meet, then that would not be, a very good reason to apply for a loan. Whereas with that you could save or, cut back. So those kind of things. And then how much will it cost me? So you need to know, will you be able to comfortably, it ties in with the can I afford the repayment? So will you be able to comfortably afford to repay the loan, on a monthly basis, or will that put you in a more difficult financial situation? And then ask yourself, am I getting the best deal? Is it worth it? Yes or no? Do you need it now? You spoke about that earlier. Do you need it now? A lot of the time, whatever you need a loan for, you could probably put off and try and save for that. So you need to ask yourself, do you really, really need it now, or do you just want to need it now? And then lastly, is it worth it? So because borrowing does cost money essentially. So you need to be clear that is it something that is it worth it? Is it worth it?
Is it worth taking on that?
Is it worth or
Yeah. No, I think those are all valid things to think about. And I think again, I want the message to come across, that we're not saying that borrowing is always good. We're not saying that borrowing is always bad, but it should always be kind of considered process. And so actually, just stopping for a second, taking a deep breath, perhaps sort of, pause in the Christmas spirit a little bit, and taking off the Santa Claus hat for a second, and perhaps putting on the kind of the slightly, not the Scrooge hat, but the slightly more kind of kind of pragmatic hat, and asking yourself some of those questions, I think is going to be better in the long run. And I think the stuff around can't emphasize this enough. Borrowing always costs money. So if you're going to make the decision to borrow, you're going to pay that money on interest. That's the money that you're spending on interest is can be that's money you can spend on something else. So borrowing is a service. You're paying for the service. So if you're going to do it, it's got to be worth it. So borrowing and not knowing what you did with the money, nothing worse than that. How did I get myself into that? How did I get myself into all that debt? That's the question which we often hear from people. And by asking these questions, if you have taken on some debt, you'll know exactly why. And I think that's what we're talking about here. So slightly personal one here, but I think probably all three of us sometimes spent beyond our means at Christmas, or said, "Oh, I'll put it on the card and I'll pay it later," or I guess in my case, probably credit cards. Quite tempting this time of year to get out the credit card and say, "Oh, I'll get it now and I'll pay for it in the new year." What about yourselves?
I usually put like a budget on the side. I want to spend it on Christmas time.
Okay, so you're the one organized.
Or I think through what money should be spent on and how much I want to spend on.
Right.
Obviously for emergency, I've got a credit card.
Yeah, credit cards.
Okay. No, so I think I'm a little bit like Monica in the sense that I have like my savings account. So I just put money in there. I haven't been in a situation yet where I've needed to consider borrowing. I'm sure someday I will be.
Yeah.
So right now it's just the savings account.
And there's obviously overdrafts, and there's different ways to do it. I think if you do lots of online shopping around this time of year, you'll see some of the kind of the buy the pay in 3 and the sort of the buy now pay later sort of guys.
Yeah.
And so I think we'll look at what some of those options are and what they involve and what some of the pros and cons of them are. So I think we're going to talk now a little bit about some of those options and how they work and why some people use them, what the pros and advantages and disadvantages of those might be. But I think, we've got another kind of key message here, which I think really keen to get across, which is that if you do decide to borrow, it often pays to plan ahead. And I think, we'll talk a little bit about what we mean by that, but actually planning ahead that's going to, generally you're going to be paying less in interest and it's going to work out better for you. So what do we mean by that? I think there's, when we were researching this and putting this together, we were thinking about the kind of this difference between planned and unplanned borrowing.
Yeah, so with planned, you think in advance on how much you want to spend around Christmas time, and you think earlier about the consequences. Can I afford to repay it? You think like what I want to buy. So it's just that basically what I just said earlier as well. I save certain amount of money for the Christmas, and I think in advance as well. Obviously, I look around at the Christmas sales, but I just consider how much I want to spend, and I just plan that well ahead, because I just feel like if I jump into this unplanned Christmas period and just basically actually recently nearly had that moment when I went to one of the shops, obviously Primark. As soon as you come in, you see all of these amazing things, the mugs, the cups, socks, everything, and I was like, I want it all. And I'm like, no, Monica, wait a minute, hold on. Do you really need this? Do you need that sock? Do you need the mug? You've got like 500 at home. So I'm like, no, let me go home. Let me sit down and think if I really need it and what I need to get.
And I think that's there's a really important distinction here, isn't there? It's sort of if you're going to get yourself, like we talked about, if you're going to get yourself into debt, if you're going to take on new debt, it ought to be a considered decision where you ask yourself those questions that we've talked about previously. Because that unplanned borrowing, Monica could have walked into Primark and said, "Don't worry, I'm going to get out the credit card," and bought up half the shop, put it on the credit card. But that's a relatively expensive way to borrow. Things like credit cards are open-ended, so unless Monica's got a plan to pay off that credit card, that debt could be building up and hanging over her for a long time. It's used for its own sake, so you're being tempted into buying stuff that you wouldn't have bought otherwise, and you haven't kind of planned. You didn't go into that shop planning to do that, right? And I think, the other kind of quite scary thing is that because of obviously the way credit cards work, and we'll come on to this, the total cost of that borrowing, you don't know how much that borrowing is going to cost, how much interest you're going to end up paying. And so, there's a risk there of debt. And so I think, that unplanned borrowing side of things, I think that's a good way of thinking about it. On the other hand, I think you've got planned borrowing. So an example of planned borrowing might be that, not for shopping, but, so for example, around this time of year, someone might be looking to, their car's getting a little bit old, maybe it's time to replace the car, or maybe actually, need a new washing machine or
decoration
or dinner, and actually that's something where actually, you haven't walked into the shop, you haven't been tempted, it hasn't been a spur of the moment decision. You've been thinking about it for a while, and you say, oh, actually, having that thing and having it now would actually make my life a little bit better. It's and so you've thought in advance about what you want to purchase, how much is it going to cost me, and then maybe you've thought, okay, well, I would quite like it now. I haven't got time to save up for it, so I would quite like it now. So maybe then you go and apply for a loan, or you make a decision to put it on your credit card. But either way, what you've done is actually you've planned it in advance. You've made the decision in advance to borrow. You said, okay, I'm going to borrow it. I'm going to borrow money to buy that thing, and I'm going to pay it off over the next 6 months. And over the next 6 months, I'm going to put aside £50 to pay off my credit card. And so, what we're getting at here is that process of planning is really important. Don't just kind of take up debt for the sake of it and temptation. That planning is really key, because that's how you're going to borrow without ending up having problems with debt.
And as well, in the situation, let's say when we do planned borrowing for our members, you know what you need to have, and then we adjust around how much you can repay. So you actually set up how long you want the loan for and how much you can repay. So for the certain period of the time you will be repaying, let's say 50, 100. So how much is it going to cost you. While with unplanned, when you run the bill of 1,500, suddenly lots of credit companies want you to repay that 1,500 straight away next month. If you cannot obviously repay it, then the interest is added on the spending.
And that's an interesting one. I think we're going to talk specifically about credit union loans in a second. But I think so different ways to borrow loans.
Okay, so I'm doing.
Yeah, so we're gonna look through each of these. So we're gonna talk about credit cards, overdrafts, credit union loans, high cost lenders, unregulated lenders.
Yeah.
We'll have seen all of these around various places. So what we're going to do is we're going to have a quick look at why people choose to go to them, and don't get us wrong. Just because we're talking about why people choose them, we're not saying those are good things. We're talking about why, particularly in the case of the unregulated lenders, we would never advise going to an unregulated lender. Absolutely not. But we're going to look at what are some of the motivations and why might people do that. But then also some of the risks and the reasons why actually it might not be the right thing to do. So credit cards, Lynn's talked a bit about credit cards.
With credit cards, it's easy to, as we said earlier on, they've got pros and cons. Obviously, it is easy to access. You can go to the shop, you know how much the limit is, you know how much to spend. The only thing is if you run your bill too high, you need to repay it kind of next month. If that one is not repaid within the time you agreed, obviously you've got the interest applied. Usually people use it because it's there when you need it. It's always for emergency. Many times as well, many times when I use it, for example, for the flight purchases, if the situation happens that the flight is cancelled and the company doesn't want to give you my money back, you go straight away to the credit card company and they will do this chargeback for you, and they will refund you for the flight. As well, credit card build your credit score. Maybe you're not aware of it. It's just because lenders will see if you do repay this credit card or not, and how you use it. So with credit card, obviously there are risks as well. It's not just coming with that easy access. With the risks, because it's easy to use and available all the time, you can get trapped in the debt because I've got still limit of 1,000, let's say 500, I've got still 300 left. What can I get? it's try to spend as less as you can. Just don't get confused because you've got this limit 1,500. You just need to go. Let's say if this is your limit, you just have to go to the top all the time.
And we talked a couple of months ago, didn't we, about the dangers of like maxing out your credit card?
Yeah, it's not always the case. Obviously, if there is something you really need and you have to have this, is fine. Like I know it's like personal decisions about it. If you use credit card, I know it's easy, and especially when I mentioned private shop, when you go into the shop, you just want to buy everything, half of the shop, and then obviously you can still run your credit card until the limit. But I'm like, do you really need all of these things? And obviously someone has to repay for it, and it would be me.
And up on the side there, we've got something about the minimum payment trap. There is that risk with credit cards of paying the minimum each month.
Yes, I try to pay mine straight away, obviously, as much as I can. But there are lots of banks that like offer you different options to repay. But obviously, as well, you need to decide how much you can repay and so in what and when you need to repay it by, because if you obviously exceed the date, then the interest will be added.
Yep.
Sometimes the risk would be like hidden fees and interest rate can change. Normally, you should have like in your terms and conditions what is your limit and what is your percentage. Many times as well, you can be tricked into buying something via the website which is not legitimate, which is scam, or lots of sales in the website you just never heard of, but because it's like cheap. Just bear in mind as well, sometimes because you see something on Facebook or someone is trying to sell something on the other website, always check the website if it's genuine, check the reviews, if someone else bought things before and they didn't have the problems. There are lots of websites which are created for you purchase something and the purchase never arrives, and then you are basically scammed.
There's a risk that actually the money that you're borrowing is not even being used to buy something.
Yeah, it's not even basically genuine. It's just basically you spend money on something which doesn't exist.
So then, kind of similar to credit cards, overdrafts, right? So overdraft, for those that sort of don't have one or haven't used one, so it's linked to your current account. So it's basically allows you to spend money that you don't have in your current account. So if your bank account balance has ever gone below zero, you've got into your overdraft. And there are two types of overdrafts. There are overdrafts which are agreed in advance with your bank. So you might have a bank account where they say, okay, you can go overdrawn by up to £500. So that's your account balance can go down to minus 500. So effectively you're borrowing £500 or however much of the limit they set. But then there's also things called unarranged overdrafts, where it hasn't been agreed in advance with your bank. And often they're going to charge you more because it hasn't been agreed in advance. But I think, overdrafts, I had an overdraft when I was a student. I think, lots of student accounts come with kind of these interest-free overdrafts. And, I think particularly, over the past few years where life's been difficult for people, overdrafts become quite an easy and a popular way to borrow. You probably the expression going into your overdraft. And I think that's what makes overdraft so popular, is that actually it's just there when you need it. So if you do find yourself spending more money than is in your account, you go into your overdraft. And it means it's still a few days, you're towards the end of the month, and you're still a few days away until you get paid, or until your money comes in. You dip into your overdraft. And I think one of the other things that one of the other reasons that people choose it is obviously, unlike a loan, with an overdraft you only pay for the amount you use. So if just like with a credit card, if my overdraft limit is £500 and I only go £5 into my overdraft, I'm only going to be charged interest on that £5 that I've used. And I think the other bit is obviously it's convenient. It's offered as part of the bank account. So you can go in many cases, if you're not careful, you can go into your overdraft without really even thinking about it and even planning for it. And I think that's what makes it so dangerous, is that it is so easy to find yourself borrowing and finding yourself going into debt without really kind of asking yourself those questions and making the conscious decision that we've been talking about. I think other things to be aware of with overdrafts is that actually, particularly over the past few years, interest rates on overdrafts have got really, really high. So, lots of high street banks, the average high street bank, their overdrafts are now around 40%. So you're almost going to be paying twice as much interest as you would borrowing the same amount on a credit card. So really kind of, probably the way to think about an overdraft is that it's there for emergencies, but you don't really want to use it if you've got other options because the interest rates can be very high. And we'll talk a little bit about interest rates and how to compare and contrast in a second. I think, other risks, as I said, because it's so easy, there's a risk that you get trapped into your overdraft. So you get used to be going into your overdraft, going into debt every month, and then your money comes in at the end of the month, and that helps to top you and get you back out of the overdraft. And then the next month you're back in the overdraft again, and you hear the expression people living in their overdrafts. I think as a student from time to time, there were lots of people stay in their overdraft for a long period of time, and the whole time you're in your overdraft, you're paying interest that's costing you money. So you're not getting any better off the whole time you're living in your overdraft. And it can be tempting to think of it as kind of free money. It's definitely not. And I think the other thing to be aware is that if you go into that overdraft limit, that overdraft limit can get reduced or cancelled at any time. So there's a real risk that you find yourself going £500 into your overdraft, borrowing that £500, and then your bank is perfectly within their rights to turn around one day, send you a letter saying we need all of that back and we need it all back right now. So again, real risk there that it gets reduced or cancelled at very short notice. And at that point, you've got to find the money to pay it back relatively quickly. So a little bit of uncertainty there as well, which can make overdrafts kind of quite can be a fairly risky way to borrow. Credit union loans, it would be a shame to talk about borrowing without talking about ourselves. Is that right, Liz?
Yes, credit union loans, my fave. Not biased. Okay. So why people would choose it? So competitive rates, first of all. So you find that the interest rates that credit unions offer are more affordable and slightly lower as in comparison to other high cost lenders. Also find that fixed repayments and specific end dates, so you know exactly how much you have to pay monthly, and you know exactly when you're basically clear when you go into the agreement with your credit loan. You're not caught by any surprises. So basically it's planned and you know exactly what you're getting yourself into. Available even if your credit is less than perfect. So something that we also like to always say that decisions are made by a person and not a computer. So we look at every credit unions, basically look at every person's situation individually and not just make a decision based on a credit score. Every person has a different circumstance, a different background. So all backgrounds and all circumstances are considered before the loan is approved, and personalized decisions, which basically ties into what I was saying. Everyone's situation is looked at and considered, should I say. And the risks of this is that the loan can take a bit longer to get approved as opposed to other high cost lenders. So sometimes maybe the loan comes in a bit later than you would have liked, but unfortunately that's you need to wait before you even go into it. You know exactly, you've given the heads up that the decision is made between this many days to this many days. Monthly payments are fixed, so there's less flexibility. You pay interest on the whole amount that you borrowed as well. So
I think that's the thing to say with a credit union loan. I think we'd be lying if we said that we were the fastest way to borrow. And I think when we say that our rates are competitive, our rates we often check other ways of borrowing to make sure that our rates are as fair as they can be. But you should always shop around, and we'll talk a little bit about how to compare different rates of APR and understand what we're saying. But I think what a credit union loan gives you is that it gives you the certainty of knowing how long it's going to take to repay the loan in full, how much it's going to cost you each month, and what's the total amount of money you're going to pay in interest. So if you kind of if you're looking for that kind of reliability, that dependability, and to know what you're getting yourself into up front, and I think what we've talked about in terms of planned versus unplanned borrowing, if you've made that planned, conscious decision to go ahead and borrow, then actually a credit union loan can be set up quite nicely around that, because actually it helps to give you that certainty at the start and know what you're getting into. So I think one to consider there. Couple of other options, high cost lenders. So, we see a lot of those out on the kind of the high street. So that's like the pawnbrokers and.
Yeah. You need to just basically, as well, when you go around, people choose high cost lenders because it's available for those on low incomes and for credit file. It's often quick and paid in cash. So it's just easy to get as well. And most of the times it's obviously close by if you live like in like little towns or like London borough. So it's convenient location, and you've got a lot of those around your street. So it's easy to access. The risk, as there is very high interest on those borrowing with a risk of spiral of debt. Those items as well can be undervalued, and maybe you won't be getting as much as maybe you'd think or you would predict, and because obviously they need to earn money on this as well. And extra fees and lack of proper affordability check. They would charge extra, and sometimes maybe you wouldn't even know what the charge is for, but they will tell you there is a charge, and in the end of the day you might not be getting as much as you would thought, but obviously you would need to pay it back.
I think that's one of the things which makes credit unions different as well, is that actually, before deciding whether or not we can give you a loan, we're going to be looking to make sure that those repayments are affordable for you. Yeah. All lenders are supposed to do that. I think, there's been lots of kind of scandals over the past few years where you've got these high cost lenders. So Wonga, which has now gone bust, is one of them, where actually what they were doing was that they were just relying purely on your credit history without actually going in and making sure that the loan repayments were actually affordable. So
people not really aware sometimes that the interest could be like around 1,000%. So
yeah, some crazily high rates of interest.
Yeah, and the interest were not really transparent. You wouldn't, before you taking it, you wouldn't really see it straight away because that little print was that small. You wouldn't be able even to see it. So you were like, oh, I would probably repay 20-30%. And in the end of the day, you were repaying like 1,000% of the interest.
So those sorts of high cost lenders, you'll see them on the high street. Often their advertising is quite sort of bright, it's quite funny, kind of colourful characters, kind of cartoons, designed to sort of appeal to people. But I think, important to realise that, often there can be a little bit of a trap there, and actually the interest rates are going to be very, very high. And I think, at the very far extreme of this, I think, we should also talk a little bit about what are technically, unregulated lenders is the nice way for it, but I think most people would know them as loan sharks. So this is where sort of it's you're not getting a loan from a bank or a building society or a credit union or anyone that's regulated. This is the sort of the family friend or the person you meet down the pub or at work that offers to lend you some money, and I'm not sure why some of the reasons that people kind of get themselves into that situation.
I think people will get in this situation when maybe other lenders refuse to give the loan. So this would be like, I would say, the last option for them. But just bear in mind, like many times as well, they are not really. This is not really a safe option because you don't have any proper contract. You don't know how much you're going to repay. It's not regulated by any company or any professional government body. You don't know what's going to happen to you if you cannot repay it. So this is like, I would say, really high risk loan.
We as I said at the start, we don't often tell people watching these money gym classes what to do and what not to do. But I think if we are going to be clear on a point here, it's that actually you should always steer clear of an unregulated lender or a loan shark. Never gonna be a good idea. And I think Stop Loan Sharks, really good campaign, which we support. They've got some really horrible stories about actually where it starts off all friendly, the person sort of poses as a friend of the family or recommended by someone it all starts off very friendly and, oh yeah, of course I'll lend you £50 or whatever, but lots of stories where it gets really nasty, and actually where people's lives have been ruined by the kind of the worst extreme violence or threats of violence or intimidating behavior. And I can't stress enough, not a good option. Steer clear. There are better options out there, and I think it's a little bit like you wouldn't get into a stranger's car rather than taking a cab. Don't get a loan from somebody who isn't regulated, because effectively you're just being handed money by a stranger, and who knows what strings come attached. So I think enough said on that one, perhaps. So we're just going to sort of round things off today, I think, by talking a little bit about APR and how to, APR is you'll see that listed alongside loans, and I think when it was a long time ago, back in February when we did the session on loans, we did focus specifically on this, but I think we're just going to touch on it again. So APR, it's the amount of interest you pay on a loan over the course of a year. We see various different rates of APR listed. And we've talked about different types of lenders having kind of high rates of APR or low rates of APR. What for you guys would you say is a kind of a high rate of APR?
Like those pawnbrokers or these Wongas companies, like 1000%, because this is like really insane APR for the loan part. This is how they earn the money, and sometimes lots of people don't really read those APR percentage. They feel like they would assume it would be less, it would be only a little. But yeah, sometimes on 100% borrow, you would be repaying 100% back, which is in total you would be repaying 200. Yeah, just always check those APRs.
So you can end up paying back. You're paying more in interest than you originally
borrowed. Yeah.
So you can borrow £50 and then pay like 200. Yeah, exactly. Yeah. So
ridiculous. Insane amount.
What about you, Linz? What would you say is a high rate of APR?
I would think that everyone's situation is different. Because for one person, 20% APR will be extremely, expensive, and they won't be able to afford it. Whereas someone else would be like, 20%, that's perfect for me. I can comfortably afford that. So I think everyone's situation is different.
We talked a little bit about that, I think, in previous ones, in terms of kind of credit score and things like that, is that actually, the types of deals you're offered, the types of, forms of credit and types of products you're able to access will depend a lot on your situation. And so, generally speaking, things like your credit score will affect the types of deals that are available to you. So what can sound like a high rate of APR for some people, for other people, sounds like a very good deal.
Yeah.
So in terms of how APR works, let's have a bit of a refresher on this one. So in terms of APR, bear with us here. So basically, APR, annual percentage rate. So it's saying over the course of a year, what percentage of the loan are you going to be paying in interest? And so the reason why different lenders display APR is that it basically allows you to compare different types of loans. So some loans will, some loans can be over 3 years, other loans are kind of like a short-term loan, be over 3 months. And what APR does is it kind of provides you a way of sort of standardizing that and then allowing you to compare 2 different types of loans over 2 different periods of time. And so all lenders in the UK are required to state their APR. So all of their advertising, all their loan agreements, APR, you'll see it displayed everywhere. And what it does is it allows you to compare different types of borrowing in a kind of standardized way. And so, you can be reasonably confident that a loan which is advertised at 20% APR is going to charge you less interest than a loan at 40% APR, and so on. So the higher the APR in general, the more it's going to cost. Now, the one thing to be aware of there is that if your loan lasts longer than a year or less than a year, that's going to affect the amount of interest you pay as well. So, although for short-term loans, so maybe over 3 months, you may be better off with a higher rate of APR over a short period of time, because you're going to pay it off very, very quickly. Whereas, even if the APR looks low, and you're paying over a long period of time, that's going to cost you, that'll cost you more money as well. So, important to take into account the length of the loan. The good news is that you don't have to be a mathematician or a kind of an economics or finance expert to understand this stuff. General rule of thumb: higher APR costs more money. But also, I think one of the other things is that if you're offered a loan, loan calculators, loan agreements, all those things. Again, lenders, as well as displaying the APR, are also generally required to display the total cost of the credit as well. So looking into how much interest are you going to pay over the life of the loan, really, really important. And I think, if one message comes across from today's session, it's do your research, ask the right questions before you go ahead and borrow. And I think, that's key.
So for example, I know it's easy, probably everyone knows about it. So for example, if you borrow 1,000 and the APR is 20%, you just basically use your phone or calculated 1,000 multiplied by 0.2, so you've got 200. So interest would be 200 on the 1,000% on the £1,000 loan. So in total, you would repay 1,200. It's very easy to calculate. You can do it yourself.
And that's if it's over the course of the year. It gets a little bit more complicated if it's less than a year, more than a year. But then there's a general rule of thumb. And I think the other thing to say is that most lenders these days on their website will be a loan calculator where it will do these calculations for you. So, last but not least, paying it all off. Nobody wants to think about this, but be the Grinch for us. Be the Grinch for us here, Linz.
Okay, so first of all, paying it all off. I feel with regards to planning, I feel that planning is the difference between you living comfortably or you being in financial strain for a long period of time. So I feel the word planning is a very key point when it comes to loans. So with this, it basically puts you in control of your financial well-being. It avoids you building up debt and also helps you build good credit because, as we've spoken about in the previous money gym, if you make late payments or you miss payments in general, this can affect your credit score. So with planning ahead, like I mentioned, planning is very key when it comes to loans. So with that, we would encourage that you pay more than the minimum if possible. It won't be possible for everyone, but for example, if your monthly repayment is meant to be 200 and you can afford to put in 250, then I think that is a good starting point because you'll be helping yourself in the long run. You find that you end up repaying your loan before the time that you were meant to repay off. Also, monthly payments, you need to ask yourself, will you be able to upkeep these monthly repayments? Will you be able to comfortably afford to make these monthly repayments? Not just about making the payments, but will you be able to comfortably afford to make them? And also not have to compromise your living, how you currently live, how you spend and so forth. And then lastly, you need to consider the loan repayment time. So this is basically, you need to ask yourself, will you be able to have finished repaying the loan repayments in time, or you find yourself in a situation where you want to possibly apply for another loan, but you can't because you're still repaying an old loan. So it's things like that you need to take into consideration when it comes to paying it all. But I will keep on reiterating, planning is the key. The word planning.
So part of being a responsible borrower, part of being a savvy borrower this Christmas is having a plan to pay it off. So we usually would be going into the Q&A at this stage, but I'm aware that today we've actually, I think, we got so sort of wrapped up in kind of, I think, talking about the different types of sorry for the pun, talking about, terrible, sorry, talking about the different types of borrowing and things like that I think, and I think, everyone will want to be getting off with their Christmas activities. So we're going to skip questions today, but I think as ever, if you've got any specific questions about your accounts, or the things that we can help you with in regards to your accounts, always available. You can contact us, help@creditunion.co.uk, or give us a call, or send a secure message with online banking. Obviously, as a financial institution, we're not able to give individual financial advice, but we can help with queries related to your account, and kind of point you in the right direction if you need support. So without further ado, we'll be back in the new year. Really looking forward to it. We're going to be taking a Christmas rest next month. So from our family to yours at London Mutual Credit Union, thank you very much for joining us over the past year. I think when we started these money gyms back in January, a bit of an experiment. Think it's fair to say that they don't always run according to plan, but we enjoy doing them each month. We hope that you enjoy watching them. Really appreciate your support. Really appreciate your continued membership of the credit union. And I think all that's left to say is Merry Christmas. Thanks very much, everyone.
Thank you.